Good morning, everyone. Rob Lukey with our Capital Group. I wanted to take a second to go over the Case-Shiller Index that was out earlier this morning. What you'll see is you'll see, bottom line is that pretty simple. You'll see a continued decline, although you'll see some things that are changing and getting a little bit better. We're still seeing a decline, as you can see by both the 10-city and the 20-city moving composite. Going to the obviously the U.S. national home prices, what you'll see is that this drop right here was the drop that we saw in the financial crisis, and you'll see actually for U.S. national home prices, we're below that now. Even though it's a choppy movement, and we may be putting in some type of base, we are below that at this point. Now, this is on the heels of Warren Buffett and Donald Trump both saying that the market's at a good level to purchase properties, property at this point. National home prices are sitting, really, if you take a look, we're sitting at the 2002, early 2003 levels. You'll see the 20 and the 10 city moving composites both down at these levels. If you take a look at the overall markets, you'll see the markets, although they're slowing, declines have slowed quite a bit. You still are seeing a slight tick down, which is showing some choppy movement. But remember, we still have all this shadow inventory that we have to get through. My feeling is that even though the market's at a level where we're probably at a good level to go ahead and purchase properties long term, for me anyhow, I'm not taking on any new long-term investments. Now, mind you, if you have a home, or if you haven't purchased a property for your home to live in, your primary residence, obviously that I think that makes sense. But you can stay as fluid as possible and still enjoy the movement in the real estate market that I think we're going to see over the next several years, which I think we'll see choppy to an upward move up. And I think I've said that over the last 3 or 4 years now. Down, and then over the last year, I've been saying that I think we'll see some type of base be put in. If you take a look at some of the data that's not necessarily in the index, what you're going to see is you'll see, first thing I'll show you is that these are the properties, the markets that had the biggest increase, with Miami, Los Angeles, and Washington all leading the way. And you'll see that these have had the biggest decline, with the exception of Detroit. It's continued to get crushed, and even though it didn't see much of a move up, and obviously the same thing with Ohio, we saw this drop even though we didn't see any type of real movement like at least that we saw in Miami and California, Washington, and California in that same period. This is the condo prices. See pretty much the same type of activity that we're seeing in the overall residential markets as well, which is that same kind of low. Even though you're seeing in New York, obviously there's more per capita as far as condos and so forth. So I think that's really a skewed market. Really, I think you're seeing the same type of pressure, and in some situations, such as Seattle area, probably seeing more of a downward pressure in condos than residential. This next slide shows, as far as it's a poll of overall for home buyers, what they expect the value of their home to be over the next 12 months. As you can see, obviously pre-crash, pre-financial crisis, we saw people thinking, 2.9, Orange County 6.1, pretty big increases, especially in 05 when you look 11.3%. That's what people were anticipating for the market, their housing to go up. Now you've seen it kind of go full circle, where you saw it drop to negative, to now you're starting to see more of a realistic to flat market really across the board, 0.4 in 2011 and so on. This next slide, this is where home buyers were asked if they thought this was a good time to buy. As you can see, that index is moving up, where 92, 80% were really across the board. 90% of the people believe that it's a good from a long-term standpoint, it's a good time to buy. That's a positive sign for the overall market. Next slide is permits and home prices. They're actually seeing a tiny bit of a tick up here, which is another positive side. It's a leading indicator for home prices, but again, well below positive levels and still showing choppy movement. Anyhow, I hope everybody has a good day. That about wraps it up.